Welcome to TradeTheMBA.com. This is John. This report is for the 25th. And I was talking about in yesterday's video how we had the positive extreme that started back on this bar, and our expectation was right around this 41.18 to 41.13 was the overall. We had the big dip. Second day came, we were just above it. Um, did hit the 41.18, but not all the way down to the 13. And then, of course, in the morning of the next hits it, but in doing so, you activate the potential for buyers to come in, particularly from the algo setup, because they're going to cover um, all the action that took place for the short side of their previous long side. And in which case, we were already beginning to see just a little bit of support coming in here from the DOC. When we're below that negative 13.5, once it gets back above, that's it being back on the right, this lower side of here from coming underneath. Because when it's at this level, if we think of this from a cylindrical standpoint, it would be the equivalent of it being from on top. And that was just an activation of short-term buyers, and that was enough to propel things. And you can see it's continuing still in the post-market, and that's it. Just a strong move. There was no question about it. It started early, and once it broke above, particularly on the daily, it's really strong. We can see it happening in the 50K, 5K charts as well. And from an NQ standpoint, identical. In fact, it wasn't even as bad from a steel standpoint here. Short-term buyers, they were already preparing to jump in for the dip. Because what happens is they think they've missed it, and now if it runs out of steam early, that's when you get a lower double top equivalent. Wouldn't quite call it a double top, but at that point, then when you get a secondary sell, usually that one will trail much further lower. Euro also cut a bit, and not uncommon, it broke below parity. Actually closed below it too. And when that usually happens, if there's not a significant drawdown from that, and we've had this orange decay right here below the 7.5, once that happens, also we had the steel cross cyan here, which is basically short-term buyers eclipsing the shorts that are very happy to collect their returns from this beautiful cascade lower. And it doesn't mean the euro is done with its decline. I don't think it is. Just too many negative things taking place, and no real reason to want to own euros for any good purpose. And this also adds to the strain. Oil continuing its little march back up, now back into the mid 90s. And again, that just means more of the world needs dollars in order to buy oil until that trade starts to change. And when that does, then there won't be a need for so many dollars. And when that happens, um, yeah, it's a big problem. That's for another topic. TLT would promise that would continue to head lower for rates continuing to rise, and sure enough, doing just that. So all these factors that are still suggesting that while some things are slowing, some things are improving, and it's a little kind of a flux economy situation. I think there are probably going to be more regions that will suffer differently depending on how things go, and it's still just. I think more a question of what's going to happen on the food situation. I don't know that it'll be as bad in the U.S. as much as other parts of the world, and I think that's going to be an interesting factor that will definitely play on the market. From a Bitcoin standpoint, capturing a little bit of the bid, but still stuck down between that this 23 and 18 range for quite a while. The crypto winter continues, but uh, from a trading standpoint, if you're willing to get into ETH, and that is just beautiful within the algos, some nice runs with that setup. From a 50K, we could see the turnaround happened because the magenta just refused to continue to go down and then pop back up just below the, well, it was right around this 50%, but 50% was declining, so kind of gave it a de facto close above, and then that just progressed to what we're seeing right now. Nothing too surprising. Intraday, this is what we're seeing in the pre-market right here. A massive increase, but positive extremes. So we can start positive extremes from this level, even though we began with the positive extremes right about this bar as well. And then it went yellow for a couple of them. So I will put this one up here as the first, and then secondarily coming back. So just under that 4160 range. But we had some really nice, clean ups and downs through both of them. If I scroll back earlier part of the day, this is where we had a lot of mumbo jumbo in the pre-market. There was really no direction, and then we just caught the lift off and created a couple of positive extremes, but those filled right back onto the algo. And once you start seeing support start building on specific algo levels, that's always something I pay attention to when it takes place. And it was just a matter of following. We were getting these excellent DOC setups where, um, even though the orange in this case didn't dip all the way below red at this particular spot, you had a strong move of that magenta over. You knew the red was there, so one of those where potentially short lived, and then certainly could be taking that short play coming back once we popped up, and then the white took over, but wasn't able to dip much within that. Which is surprising because it's a pretty strong move from white MBI, which means there was just a whole lot of money coming in that just overpowered it by the time it was ready to rock and roll. And even though we ended up with that divergence, you still came back to that same level, which is always interesting. And when I talk about mean reversion, that's exactly what I mean. You can make a deviation to one side of it, come back to it at least to verify, and then follow the next trade as it sets up. As always, though, I will continue to update on Skype chat. Trade well. We'll talk in later.